Oh man, so the Evergrande crisis has started to worsen. We thought we were through the worst of it, but the markets are now heading back downside. We've seen the European markets head down. We've seen the US markets in a bit of a limbo with the futures down currently. And why is this going on? So we can see Evergrande is down 11% on the Hong Kong trading right now, on the Hong Kong markets. And what's going on? We thought we were recovering from this. Let's take a look and find out what's going on. So by way of a quick recap, Evergrande, one of the largest property developers and home builders in China, are currently going through a bit of a debt crisis. They have about $305 billion of debt, which they are struggling to pay. To put this into context, that debt accounts for about 2% of China's GDP. And China cannot afford the impact and the contagion this could have on their wider financial system, but also their real estate market. To put this into context, the real estate market accounts for 30% of China's GDP, and it accounts for 40% of the household wealth in China. So a lot of residents' wealth in China are tied to real estate and real estate prices. So this is a major concern. So what happened that spooked the market? Well, this is what happened. On Thursday, we thought, well, there was a coupon payment due on a $2 billion maturity bond, right? The initial offering was for $2 billion. And the payment that was due was for $83.5 million. That was due yesterday, and they missed the payment completely. But what was even worse was there's an eerie silence. We've not heard from Evergrande. They've not said anything. They've not come out and made any statements. They've not communicated to the creditors that we're trying to pay it. Let's get into a discussion. And that's what's concerning. Normally what you would expect is for them to come out and say, look, guys, we raised the flag, we raised the alarm, we said that we're struggling. Can we have some time? We don't want to make all our payments now. We need to plan them out for the next 3 to 4 months, and then we'll communicate how much each creditor can get for now and what kind of a haircut can we expect, right? That's what you normally expect. But what did we see? Just an eerie silence. Now, this is quite concerning because what we also have is on next Wednesday, you have another bond due payment for $47.5 million, and it doesn't get easier. So that one is dollar denominated. Both of these are offshore, not onshore. And then they have a payment due every month, October, November, December. So this is just going to get worse. This is how these debt crises tend to play out when you have a cash flow issue. It doesn't get easier, it gets worse. So you need to get on top of it. And this eerie silence is a bit of a concern for the markets, which thought we were through the worst of it. So Monday, Tuesday, we had a whole bunch of panic. Everybody kind of, at that point, felt like it overreacted. And then they started recovering back on Wednesday and Thursday around the idea that, hang on a second, China's pumped in another $18.6 billion into the market. Evergrande earlier struck a deal with one of their onshore creditors to pay $35.9 million, and suddenly the market thought they were doing great. But it's not that easily resolved, right? This is a $305 billion debt issue we have here, right? There's a lot of interest due here, and this is not going to be resolved by a few small efforts here and there. And I don't think the markets should be as yo-yoing as they are right now. They need to understand the severity of the issue and kind of understand that this isn't going to go away overnight. So now, we need to understand that they missed the payment yesterday, but that doesn't mean that they've technically defaulted. You get up to 30 days to make an arrangement and agree terms with your creditor. If they fail to reach an agreement or fail to make that payment, it's at that point that you will default on your debt. At that point, you default. Until then, there is no default. So what does this mean? What's going to happen next? So we know that, this can cause wide unrest in China from a social but also an economic point of view. So this is the problem for the CCP. So the CCP could technically come out tomorrow and say, hey, we've printed $305 billion of money and we're going to clear the debt for Evergrande. Let's carry on as per normal. And whilst the rest of the world would love that, and it would send all our markets ticking back up, this is not the plan for CCP, right? Xi Jinping came with this term. He wanted to tackle the debt-ridden culture in Chinese firms. They're very leveraged up. Part of the reason China was able to achieve the phenomenal GDP growth they've been seeing is the amount of leverage they've been ensuing over the last decade or so. And a lot of companies, not just home builders and construction, but financial firms and other firms, are hugely leveraged up, and Xi Jinping understood that and he wanted to tackle that, and he put a whole bunch of policies in place. Now that is how Evergrande ended up in this position in the first place. Once they realized they were over leveraged, they started selling properties cheaply to get more cash flow in, so they look less leveraged, and that's how they ended up in a cash flow pickle, which has now meant they're in $305 billion of debt right now. So Xi Jinping is in a tricky situation. If he clears the debt right now, he's then in moral hazard, right? Everybody's going to say, oh, look, you've set a precedent. Now, if any company, if any of the other developers are heading into default, you're going to have to clear them out as well. If a financial bank goes through some trouble, you're going to have to bail them out as well. That's just how it goes, right? But on the other hand, if he doesn't, you've got 1 million homes prepaid that Evergrande have sold where Chinese residents have saved up their life savings to buy these homes, and they're out protesting right now. So Xi Jinping has a social issue on one side and he has an economic issue on the other side, and he's going to have to tread this really finely, because it's not as simple as some people are saying on the internet and on YouTube, where, oh, he can just print 305 billion, this is China, and we're fine. It's a bit more complicated than that. We need to understand some of the nuances. So to put this into perspective, there are 10 Chinese home builders with debt of up to 1.86 trillion yuan, right? To put that into context, that's 2.5 to 3 times more than what Evergrande has. Now, if Evergrande accounts for 2%, Evergrande's debt accounts for 2% of China's GDP, this batch of the next 10 could account for another 6%. So 8% just between these guys of China's GDP is sat here in debt, which, if there are contagion fears, could really cause a big problem for China. We know the real estate market accounts for 30% of China's GDP and 40% of the residents of China's wealth. So this is not something that Xi Jinping can take lightly, and he can't just let the housing market go into crisis and collapse. So he's got to intervene. But how is he going to intervene, and how smartly is he going to intervene? That's the question we need to answer here. Now, if any of you guys watch my videos on Evergrande earlier in the week, you will understand that I separated the onshore and offshore commitments that they have. Now, the reason I did this was the concern around the rest of the world is not really for the onshore situation, right? They care for the foreign investors and what contagion that could have into foreign markets. And I mentioned that a lot of the bonds, the Evergrande bonds, were being held by the likes of UBS, BlackRock, PIMCO, Alliance Bank. Various other banks are holding liabilities, well, bonds with Evergrande. Now, the total amount held by onshore of the 305 billion is only 20 billion, which has you thinking, okay, maybe this is not going to be as much of a contagion risk as we thought, right? Now, because a lot of people are saying, oh, this is like Lehman Brothers, but you can't really compare this to the Lehman Brothers crisis. With the Lehman Brothers crisis, you had a financial entity in the Western world, okay? Here, you have a home builder in China. Very different. I'm going to explain why. Because with a home builder in China, what you have is you have assets. So of the 300 billion Evergrande has in debt, they've probably got about 200 billion worth of assets in terms of lands and the homes that they've started to build. So if they needed to liquidate, they can fulfill some of their debt obligations. But obviously that doesn't complete the homes for the residents, which is part of the issue, okay? Because they've already pre-sold these homes. The other thing which now with Lehman Brothers, it was complete opposite. They're selling financial derivatives. We're talking, mortgage-backed securities, credit default swaps, cross-currency swaps. These are financial pieces of paper that when the market implodes are literally worthless. There's no land to tie it to, there's nothing. And that is the big difference here between your Lehman Brothers moment and your Evergrande crisis. But the other thing we need to understand is that in the Western world, the US government didn't have the regulatory controls that China has at its disposal, right? If the CCP wants to go in and do a creative measure, they can. Whereas US had to follow their regulation and therefore didn't have as much flexibility in the Lehman Brothers situation. So that gets us thinking, what kind of a solution could China come up with? Because it's pretty clear they can't just print 305 billion. Well, they could technically, and it's not. I wouldn't rule it out, but they shouldn't really be printing 305 billion and then saying, "Oh, look, we've dealt with the disaster averted," because you've set a precedence, and there's a whole bunch of moral hazard there going against his goal of deleveraging the Chinese economy. So he wouldn't be setting a good example. Now, on the other hand, if he just completely let it collapse, contagion risks are very, very apparent onshore in China, and they're not going to disappear, right? If he allows them to collapse, he's going to have 1 million residents protesting, because we've already seen the protests already. We're seeing plaques going around with saying, this is my blood and sweat earned money. These are people's life savings. Like I mentioned, 40% of China's household wealth is tied to real estate. So he can't afford a real estate crisis right now, particularly at such a fragile time of the economy, given the pandemic. Okay, so that has got me thinking that he's going to have to come up with some sort of creative middle ground. And what does that look like? I mean, if any of you watched my video earlier in the week, I decoupled the onshore and the offshore investments, right? So you've got the onshore debt, and then you've got the offshore, which is 20 billion. And the reason I separated those is you have something what's called a cross default trigger. Now, if you default on your onshore, so if they default on the Chinese debt, that will trigger a default on the offshore. So any foreign investors who have the debt, that will automatically trigger a default on those as well. However, if you default on your offshore, that does not trigger a default on your onshore. So I can easily see a situation, some sort of creative situation where as far as you're concerned, if you're holding offshore debt of Evergrande and you're in the United States, UK, Europe, you're not getting much of that back. It's very unlikely you're going to get any of that back, because I can see them defaulting on that as the first port of call and using that cash flow to try carry on. Doesn't mean that they're not going to eventually default on onshore as well, but at the very least, they're going to default on the offshore so they can keep things moving. I can also see China trying to get involved in some sort of a creative way of keeping Evergrande up in some sort of skeleton form, right? Because like I said, they've got to complete these million houses by hook or by crook. I can't see Xi Jinping not getting these houses complete for his residents. So I can see him kind of propping it up in some sort of backhand way to help them complete the houses, maybe fund them, clear some of the debt in a backhand way, or take some equity or something like that. We saw that in the UK with RBS, Royal Bank of Scotland. Could they do something like that around getting those houses complete and just helping them tick along in some sort of a skeleton form till it's complete and then letting them dissipate away? That's something we could see as well. But overall, guys, that's where we're looking in the market. We had Monday and Tuesday where, really a whole bunch of scare. Towards the end of Tuesday and Wednesday, things started turning back up. They were like, oh, look, China pumped in 18.6 billion injection, and Evergrande had agreed their 35.9 million repayment, and everything's rosy. Not that simple, guys. As we saw yesterday, the debt payment of 83.5 million was ignored. No communication was made, eerie silence, and this is not looking good. Evergrande were coming out initially and saying, oh, we got this under control, we're going to figure this out. But going quiet on one of your coupon payments doesn't bode well, especially when you have another one due on Wednesday and it gets worse and worse. One due October, November, December, it's going to exacerbate the issue. So they need to come out, they need to be clear, they need to find out a way. The other interesting thing is China's been, the Chinese government has been eerily silent on this matter as well. They've not come out or put their foot down or shared their stance, which we'd expect, But, that can change overnight. Like I said, they can come in, they can bail out Evergrande overnight if they choose to do so. That's the environment we're in. Now, what we have seen is that the Chinese government has ordered the local governments to assemble teams of accountants and legal teams to examine the financial crisis in their area. So he's prepping them up to kind of say, go examine all the issue and the contagion. So he's almost data gathering to say, how deep of an issue is this? So he wants the local governments to really understand what other, home builders could this affect? What, supply chain could this affect? What other companies will be affected by this in your local areas, and what's the damage that's going to be required? Not only that, he also wants them to be prepared for the damage from a civil point of view in terms of protests. So he's got to prepare for that side of things, because that could explode as well if not handled correctly from a political point of view. So yeah, this Evergrande crisis is back. It will be weighing in on investors. Let me just take a look very quickly before I leave you at where the futures are sitting before I upload this video. S&P futures 0.38% down. You've got the Dow down 0.3% and Nasdaq down 0.5%. So not looking good. We're set to probably lose some of our gains from yesterday. And the market is just overall not in a happy place right now. Just to give you an idea of what happened here in Europe, the ECB and the UK, they've started to come out with hawkish tones around tightening monetary policy as well. We heard what Jerome Powell said in the States. It's clear that now global economies are starting to, think about reducing their purchases, because obviously these purchases from during the pandemic cannot continue forever. So, we're going to have to come off that Red Bull at some point, and it's clear that point is very soon. And the Fed have also indicated that we could see a rate hike at the back end of 2022. with that issue, you've got a whole bunch of concerns around the Delta variant still propagating. We've still got issues with supply chain. Semiconductor companies are coming out and saying this could head in well into the end of 2022 and 2023. So how does that bode for the same timing as potential rate hikes? You saw Nike come out yesterday with their earnings, and they cut their expectation for the fiscal year 2022 to say that, look, we're going to miss expectations because of the supply chain crunch. We're going to have a difficult Christmas period where demand's going to be high, but we won't be able to fulfill that demand. And that led to similar retail companies, Adidas, Puma, JD, all falling 3%. You've had the German confidence index come out as low, which showing that, the recovery is really fragile right now. And so you've got really, fragile recovery. You've got the Evergrande crisis on one side, and you've got central banks which are very keen on becoming hawkish and taking this Red Bull away to see what the market looks like when we take away this stimulus, right? But it's just such a delicate process right now. So as investors, we're in an uncertain time. What do we need to do? I've posted a video about that. Go check that out. I'll post it up somewhere here. Go watch that video because it gives you an understanding of how do I position myself and start thinking in an uncertain market, and what are the kind of moves you need to play, because this is a kind of market where it can go down and give you an opportunity to dip buy, but at the same time, it can not, and it can turn around and climb back up the other way, right? CCP could come out tomorrow, print something, and clear the Evergrande crisis, and we shoot back up. So you need to position yourself and your portfolio to be ready for either. You shouldn't be stuck to, we're going to get a dip. I can't wait to buy a dip. I've got loads of cash ready. But at the same time, you shouldn't be the other way that, I think it's just going to go up and there's no downside here. There you go, guys. Hope you found this video useful. The Evergrande crisis is still here for now, heading into the weekend. Hope you find this video useful. If you like this type of content, comment below and let me know your thoughts. And I will see you in the next one.